Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future. Good morning, everybody. Jim Cagnina. I am back. See the futures today, July 26th, 2023. FOMC day. We have a lot of stuff to talk about. We have a great guest, and I'm not going to delay any longer. I'm going to introduce Stephen Jonathon to the show. Stephen, good morning.
Good morning.
How are you?
Very good.
So, Stephen, Tom Schneider told me, and I've been working with Tom for a little while now, not really long, but he's like, Jim, you got to get this guy on your show. And so I get this. When you get that kind of endorsement from Tom, you can't ignore it. It's very important. So, and you worked with Tom before, right? What capacity
Correct.
were you with Tom?
At Bloomberg, he was focused on charts and data visualization, and I was focused on global economics and currencies.
Okay, and so that's kind of your specialty is global economics and currencies?
Yep. I spent a good number of decades at three big banks on their currency desks.
Okay, what banks we know, right?
Oh yeah, I mean the Citi before it was Citigroup, and then Merrill Lynch before it became part of Bank of America, and then Chase before it merged with JPM.
Okay, so those are the big three, pretty much.
Yep. And then at Bloomberg, I worked with the sales teams to work with Bloomberg software that focuses on currencies, because it was viewed obviously as a way to impart my knowledge as how to use the software to better analyze markets on the part of all the various clients at Bloomberg.
Got it. So, I mean, really the glory days of bank currency trading was late 1990s, right? Maybe that's when it was.
Well, actually, I was actually talking to Tom about this the other day. You know, there was a wave of very active currency trading in the early to mid 80s. For a couple of reasons. The dollar reached all-time highs, sparked a lot of intervention, sparked a lot of government action, which at a level of coordination, which really hasn't been seen since. And the EU was in the process of creating the euro, and there were a lot of teething troubles with that process over a 5 or 10 year period, which generated enormous volatility, which didn't really calm down to the early 90s.
So, all right. So you brought up a couple of points, though. Before I get into those points, where are you located? Are you East Coast guy, West Coast guy?
Right now, I'm sitting in East Ham, Cape Cod.
Oh, nice. Is this your home or vacation?
Vacation home for our 2 weeks. We're up here for 2 weeks.
Nice. All right. Well, I appreciate you taking your time out of,
Sure.
which sounds like a very nice couple of weeks.
Yeah.
Anyway, all right. So you mentioned right off the bat, you mentioned level of coordination. Now, this week we have FOMC, we have ECB, we have Bank of Japan, all maybe doing stuff, maybe not doing stuff. Let's talk about level of cooperation. Is there that constant phone call communication between these three?
Well, I'm sure that there is. If there was ever a kind of a crisis kind of situation, for example, the last time the G3 really got together was when the massive Japanese earthquake hit, and there was Bank of Japan intervention that day. That's 12 years ago. And the Fed was involved for the account of the Bank of Japan, because all these 100 banks have the right to kind of call each other kind of as a firefighting crew. And then they all join in if they need to for the other guy. But that's actually key, right? When the Fed says we're intervening for the account of the Bank of Japan, that's different than the Fed saying we're intervening for ourselves. Much different. It's always been that way.
So those are the three big ones, right? But there's other big ones as well, right?
I would say, since the big change since the early 80s is when you talk about intervention and official action and coordination, it's not just three, it's not even seven. It would really be the G20 because you have to add in the major emerging markets, the global south that now have central banks and central bank actions that can move markets. So you're adding in a Brazil, a Turkey, a South Africa. Prior to Ukraine, you're adding in Russia. You have to consider China. So it's really 12 or 15 major economies and the central banks that go with them that are critical to the currency markets.
So interesting you say G20. There was a little bit of buzz on the wires that maybe Putin was going to show up to the G20 meeting.
Right. That's a lot of mess there because a warrant for his arrest had been issued by the International Criminal Court. And so the South African government received massive pressure to make an arrest if he stepped foot on the tarmac out of the plane, and they prevailed upon him to basically say he wasn't going to come. That's the backstory to that.
Oh my God, the world's gone crazy, Stephen.
No, seriously,
Wow.
that's what happened. Then there was enormous pressure because the South Africans had already been under some suspicion for some kind of in the dark of night shipping something out of one of their ports that ended up in Russia. And so then when the indictment came down, it was kind of like that would be two strikes. And so they were very hot under the collar and they convinced him to kind of bow out. So, but the thing about the coordination in terms of the markets are so much different now because they're so much bigger, with $7+ trillion a day trading. And I kind of liken the currency markets to the beach where you see tides come in and tides go out. And, that's kind of like the price action on 90% of the time, right? And so, when you end up with something that exceeds the tide in or tide out, that's the Japanese earthquake. That's the, Ukraine. That's, pick other events that are outside of the norm because otherwise the markets is so big and deep that things kind of get washed out. There's so much commercial activity. There's so much institutional investor activity that the buyers and the sellers are just all there. And I liken the buyers and the sellers to the tides. And so every 6 hours, a tide moves in and out. And you can almost make that same kind of judgment about the market that there's so much volume that it takes a cataclysmic event for one side to outweigh the other for more than a little bit of time. And even after Ukraine in February of last year, when you can look at price action in all the major currencies and see what seemed like trends being broken, ultimately they got washed out because the size of the commercial interest and the institutional investor interest is just so enormous. You're pushing, it's hard to push. And, there was a famous quote, I'll just throw out a famous quote that could potentially lead you to some other questions. A famous Ben Graham quote, who was kind of known as Warren Buffett's Buffett. And he said that in the long run, the market is a weighing machine. In the short run, the market is a voting machine. And I really think that's a really interesting way to think about the currency markets and any other market. He thought about it in terms of equities because obviously FX wasn't traded back then. But so think about the various things coming from the various central banks over the next week to 2 weeks, ECB, Fed, Bank of Japan, and then even the major emerging market central banks. And markets are voting with their views about what they'll do, and then maybe more importantly, what they'll say about what they did, and they'll say about what they might do down the road based on data, and then they're voting.
So let me ask you this: is the weighing machine anchored by the interest rate differentials between the two?
I would say the interest differentials are more on the voting machine side. That's more short to medium term. The weighing, if you want to pick the ultimate weighing machine, Jim, the ultimate weighing machine pros and cons is, does the RMB supplant the dollar? That's the ultimate long-term weighing machine. What's going on with the Chinese economy, U.S. economy, efforts to increase the use of the RMB, markets that decide to go to one or the other there, that's weighing economic long-term fundamentals and then what follows is use of a currency. But in terms of 1 week versus the next, the Fed says it's doing X, like, for example, today at 2 o'clock. What does Powell say? Not just about what they did, which everyone assumes is another small hike, but he's going to, I think, make it very clear that the Fed is data dependent, and therefore the markets need to be cognizant of the critical thing for the markets is, well, if that's what he said, then what data counts? Because, it's like you have to be looking at the right bits and pieces to basically look over the Fed's shoulder. And what are they looking at today? Are they looking at inflation, unemployment? Are they looking at housing starts? Housing is huge in the U.S. Are they looking at corporate bankruptcies, which are increasing because of the rise in rates? The trick is to look at the same data that the Fed or any other central bank's looking at. What's the Bank of England looking at? What's the ECB looking at? Because it's great for them to say they're looking at data, but if you're not looking at what they're looking at, you're going to be caught out.
So, but in the short term, do traders look at something different, perhaps, than a longer term central bank
Yeah, I
view?
would say certainly. I mean, and you've got all the CME charts up. I mean, in the short term, you're thinking about things like market positioning, right? You're looking at the commitments to traders. What are the speculators doing? What are the hedgers doing? How is the net position changing week to week? That's giving you clues to what people are thinking about. In the only place in the foreign exchange market, it's important to know where you can actually see what positions are. You have no idea what the institutional investors are doing in their hedges on the euro or yen or RMB. I mean, they might issue quarterly reports in their statements and add a little bit at the end of the report where it talks about what hedges they have on. But that's 90 days overdue already when that comes out. So week to week, that Friday afternoon COT report is your most important short term, I would say, indicator of where the voting is.
Okay, so that's good information because the hedgers, right? I mean, particularly if you're importing export business, right? Import export business,
right?
You want to kind of get ahead of what that currency change is going to be, so that you could price your product appropriately, right?
Yeah, you would hope to be ahead, right? So you're a hedger, you're a corporate, or whatever you're trading, could be corn, could be euros, right? So I always tell people to watch the speculative side of the COT because that's the one that changes week to week. Because don't forget, they're on margin or they've got leverage money, so the potential for them to have to make a move is much different. And again, the other reason I would say that is because, again, is one other major change from the 80s to now is how corporations look at currency risk and managing it. I was in the markets when corporations were like hedge funds. You had corporations who would take massive positions, make massive bets across all sorts of currency markets, almost like they were trying to add alpha to their own import-export business. And with lots of corporate scandals in the 80s to 90s, early 2000s, that game is over. And I would say it's hard to put a percentage on it, but clearly it's well over 3/4 to 80% of corporates are just boring. Their boards want them to be boring. They don't want a Wall Street Journal article showing up about some position that the treasurer put on in British pounds. They don't want to see that. So what they do, Jim, is a very boring kind of hedging strategy where they convince their accountants that they have good enough knowledge about what's going to come over the next 4, 5, 7 quarters so that they then layer in hedges bit by bit each quarter. And so they're never looking at picking the top or the bottom. They're doing for the company what you and I would do with dollar cost average with an investment.
So
So
would
that's
you
why
say,
that's why getting back to the COT, you focus on the specs because they're not doing that. They're trying to make alpha.
right? Okay, but would you say, going back in time a little bit, so you have deep institutional knowledge, so I just wanted to throw this out.
Mm.
Would you say it was Enron or Shearson which scared everybody straight?
There were a couple of them. Enron was definitely one, but there were a couple of other corporates. And keep in mind that this is a global game, right? So some of the big news, the negative headlines, popped up out of Japan, popped up out of Germany. Gesellschaft, MG Trading had a huge blow up in currencies. There was a guy trading out of Japan, Mr. Copper, that all of a sudden was involved with putting some hedges on top of some of the copper trades. Then you had the guy in Singapore that blew up bearings. So the news that generated the backwash that corporate boards started to watch wasn't just in the U.S. It was all over.
Okay, that's interesting. A good point. Yeah, it seems to me there's always some currency desk or some rogue currency trader doing
Yep.
something and getting
Yep.
in trouble.
And one of the reasons is because in the over-the-counter market, there's not a lot of regulation. You know, the global central banks, when currencies as a trading vehicle were born in the late 70s when they started floating, they instituted what people call in different parts of the world, different things, but light touch regulation. Basically, this is a professional market, pros trading with pros. And the only place that there are reporting requirements is what we started talking about, which is on the floor. The CME had all kinds of reporting requirements, you know, not just the COT snapshot at the end of the week, but even as you can just imagine, time stamping trades. When did you put the order in? What fill did you get back? You know, what was the average of the fill? None of that was going on in any stretch of the imagination over the counter. Nothing whatsoever.
Yeah. So yeah, and then again, I say this all the time. Advantage goes to futures, and I'm obviously a mega fan of CME Group's currency futures because they cover all the majors, some of the minors, crosses as well.
Right.
And it's FIFO, first in, first out. It's
Yep.
transparent. The book is
Yep.
the book. There's no intermediary messing around. So that's where
Yep.
my allegiance is, but mostly because it's a better place to be.
Well, I would just say, I mean, again, having sat on the currency desks over the counter, I mean, I obviously interacted with people on the floor. It was a great place to see trading, and it was more transparent in terms of maybe where direction was going. It was the tail on the big dog, and the big dog was the over the counter market. And so for large corporations looking to do, you know, 500 million Deutschmarks and then 500 million euros down the road or similar in other currencies, the over the counter market accepts that volume very readily. And the bookkeeping, I guess people used to always wonder about, which, you know, how many contracts do I have to keep track of, et cetera, et cetera. So there were people that were looking at over the counter markets to actually put their big trades on, but they looked to the futures markets for some intel on direction because you could see transparently what was going on.
Yeah, for sure. So let me pivot a little bit. You mentioned RMB. Do they have a shot at the title?
It's a long-term game, and in this case, the weighing machine is decades, right? The weighing machine's not years or half decades; it's decades, because the switch from the pound to the dollar began around World War One, but wasn't fully consummated till after World War Two. One of the reasons it took that long in that case was it wasn't until 1914, 15 before the U.S. had the Federal Reserve. So you had a situation where the U.S. was punching way above its weight as an exporter, industrial production, and all those kinds of economic data points. But it goes to show you how much importance markets place on the regulatory side and the institutional confidence of having a central bank that it could rely on. And until there was such an institution in the U.S., it didn't matter what size our steel production was or our exports were relative to the UK, the Bank of England still ruled. And so that switched over that 25, 30-year period. So that's the reason why you have to think about it the same way when it comes to the RMB. What is the PBOC doing? What's the level of transparency? You know, how much are they potentially putting the finger on the market when there's that tide moving in and out that I spoke about a few minutes ago? And what will you know about that finger on the market? How transparent is what they're doing? The Fed issues, it's not very well known because they don't do it very often. But whenever the Fed intervenes, you will ultimately see it in the minutes, right? Not the statement, in the minutes. There'll be a section in the back of the minutes with international activity, and they will say what they did. And so that's a critical component to markets understanding and having confidence in the Fed, is that they know what the Fed did. Even if it's with a bit of a lag, they'll understand what they did. So the other thing I would say is when we talk about the dollar or the RMB, you really have to divide it into 4 or 5 components. There's the trade dollar, the bill of lading dollar, there's the investable dollar, there's the treasury dollar. And the interesting thing about the treasury dollar was that in the run up to the potential default debt ceiling issue in the US, people were wondering about overseas interest in U.S. dollar assets if there was a default, and we obviously got through it. And it's interesting to think about the treasury dollar and understand that what we think of in the US as a deficit or a liability, overseas investors consider it assets because they're thinking about investing their reserves in US treasuries and agencies and whatever else they want to invest in. And those are assets. You know, Jim, every central bank in the G7 has a schedule. And that's one of the issues, right? If I want to do a 7-year investment in treasuries, I can look at a calendar and know every 7-year auction coming up for the X number of quarters or years in the US and the major central banks. The problem is whether I know that or not about Switzerland is irrelevant because of the size of the Swiss 7-year is so infinitesimally small that it's the big institutional sovereign investors would skip it over because they can't put any money there. You know, so it's the size of the auctions, the regularity of the auctions, the transparency of what the Fed is doing. And so you divide the dollar into those sub dollars. And yes, Argentina is now selling grain to China in RMB. So is Brazil, right? Russia and China are doing currency swaps across the borders for obvious reasons after what's happened in Ukraine. But there's a long way from trading bushels of corn in RMB to the RMB supplanting the dollar.
Well, so do you think though that to become a global, like the global reserve currency, as they call it, that the world would have to get over the idea of having a Politburo run it versus a republic,
Yes.
having contract law, established contract law based on UK instead of something else? Is that
100%?
Could that be overcome?
No, well, that and the proof of the old, you know, a proof in the pudding is in the eating, right? So the RMB is increasing its usage in the early teens, 2000 teens, 13, 14, 15. It's all the rage. And the SWIFT data, the international agent, bank-owned entity that tracks global payments, was showing an increase in RMB usage, albeit from infinitesimally low levels to just very low levels, but it was going up. And then all of a sudden, in 2015, there was a devaluation by the authorities in China because they were worried about export competitiveness. They tweaked the way the RMB was going to be managed, what have you. But the problem was the messaging was abysmal. And so it shocked people and scared people. And if you look at market pricing those couple of weeks in August of 15, look at the currencies, look at the equity markets, a lot of mess. And so the issue is, if we see something like that again, will we get similar action? But maybe as importantly as whatever the action is what will they tell us? How will they message it? And I think that people inside the U.S. government that were trying to work closely with China in the mid-teens, when our relationship was not nearly as adversarial as it is now, would tell you that they didn't have a problem with what they did. They had a problem with how they told you about what they did. And that gives the impression that you just raised, that it's all kind of happening behind closed doors and no one really has an understanding about what happened.
Yeah, but on that note, actually, you opened the door for this diversion I'm going to throw out at you. Why is the FOMC minutes not released like tomorrow? Why is it delayed?
Well, okay. So keep in mind that I'm of a generation that never even saw a statement. And I didn't know what the Fed did on a day like today until tomorrow morning at 11:30, when the open market desk did its repos or not. And if they did a system repo, we knew they'd eased, but no one told us, right? So understand that whatever level of transparency you see now from the Fed is relatively, and if you want to, in Fed history, so Fed history goes back 100 years, right? So in Fed history is a 25 or 30 year kind of history into the mid 90s before these kinds of things occurred. And then the U.S. Congress passed what they call Humphrey Hawkins legislation in the 60s. And that's the only reason Powell and everyone before him shows up twice a year in front of Congress. Not because he wants to. There's a law that mandates a testimony by the current Fed chairman twice a year. And that only dates from the 60s, because that's Humphrey Hawkins, the two people that sponsored the legislation. And so then the press conference after the meeting is even a more recent phenomenon, right? Don't forget Greenspan would sit there in front of Congress. There's clouds of cigar smoke all over the place. And it was almost like if you've understood what I've said, he was almost saying that I must have misspoke, because he was like doing his level best to kind of confound everybody. So the point of having minutes 3 weeks in advance, I guess to my way of thinking, I don't think about it as much because I know what wasn't there as recently as 15 or 20 years ago in terms of transparency. And relative to other central banks, it's also been a leader in doing this. And the
Yeah,
fact
but
that
I
then
mean,
after the speech, after the meeting today, with I think a 5 or 10 day lag, and then 5 or 10 days before the next meeting, all of the FOMC members are out speechifying all over the world. And again, that's unique too, right? That all of the policymakers that have a vote, you can understand what they think. And that's why people can come up with hawkish or dovish kind of indicators for all these people, men and women, because they're so visible in the public eye with what they're thinking. And that's also somewhat unique among central banks, where you have a
yeah, is it
governor and that's it. And here it's not the same.
right? Well, ECB also, right? You have some ECB people
Yes, and
speaking their
a
mind.
couple of other ones, a couple of other ones. Yeah.
And do you think that's a good thing or no?
Oh, I do. I mean, people might say, "Oh, is there such a thing as too much transparency? It gets noisy." But I think at the end of the day, having all the information out there is what you want, and then the market has to come up with its own views. That's why I mentioned you're looking over the Fed's shoulder. So, is he saying something today? If you've anticipated what you think he's going to be talking about, which data set, which period for that data, what subset of inflation, all of those sorts of things, if you've anticipated that correctly, you've already positioned yourself.
Yeah, I would just, my mom learned shorthand in high school. She could
Yep.
take these minutes and type them up by Friday. I'm
Yeah.
just
Well,
saying.
the minutes are actually, like I said, the minutes are actually. I mean, these minutes. It's umpteen pages. It's not like a 5 or 10 page thing. It's multiples of that. And like I said, it includes a lot of other information, right? If they deliberated on some change in payment systems, for example, will he mention today this new animal just announced by the Fed recently called FedNow, which is instantaneous settlement, right? Meant to eliminate float and all that sort of thing. That's the sort of thing that might have been discussed in the meeting today that you won't know about until you see the minutes in 3 weeks.
So just we're running out of time, and I want to
Sure.
get to the Japanese yen real quick. But you did
Mm.
mention Fed now. Is that gonna increase efficiency at all or no?
That's the implication. That's the implication. And they went very slow. They were trying because of the way we work in the U.S., where it's a market economy, and in this case, it would devolve to the banks. But waiting for the banks to do the right thing. And when you heard about the 5 day float, well, there were 5 day floats when I started in the market. That's because you put checks on a plane and shipped them off to Buffalo. And if there was a snowstorm, then the checks
Uh-huh.
didn't clear, right? Well, that's not
Right.
the way it works anymore. But the banks seemed like they were acting like it still worked that way. And so the
Yeah.
Fed was gently prodding them to join the 21st century, where every other central bank in the world has gone a long way ahead. And the banks took a long time, but they've done their own, and the Fed did its own, and we'll see where usage comes down the road.
So let's pick. We are getting short here, but mission
Yeah,
control. We're going over a couple of minutes. Sorry, guys. Let's take a look at. I have a Japanese yen chart pulled up.
yep,
This is the
yep,
futures yen
yep,
over the U.S.
yep,
dollar,
yep,
and I've got a couple of areas highlighted here that to me are clear and present areas of resistance and areas of support. What happened
yep.
during this time frame? This is like the early summer.
Well, I would say it's what happened with all the other central banks. It's like you're watching the interest differentials. What is the Fed saying? What is the data in the U.S. implying the Fed will be saying? And what is the data saying in Japan? And what is that data implying the BOJ will be doing? And then you have a little bit of speculative pressure when you see potentially one central bank may be moving off kilter from the other two or three, and you end up with market moves. And currency markets are they can be very, like I said, they can be very, very sticky. But you can also run and generate trends, which can be powerful. And it went off on its own. And then the Bank of Japan made a few comments about concern about currency movements, and lo and behold, we stopped. So that's why that level that's around 145 kind of became a mini line in the sand. And we'll see, that's for the summer. Will it be that way for the year? Well, we'll see. When the data comes out, after we have the Fed statement, we get 2 more months of data before the next Fed meeting. And does that mean they're on the hot seat, or are they sitting back and just watching?
Right. And by the way, that 144 number, guys, you do the inverse of that. You're going to get where my crosshairs is on my chart because futures do it with the denominator being the US dollar, whereas over the counter Forex is the opposite. I think you guys can't deal with the decimal points. That's my conspiracy theory there. Any event, we covered a lot of ground today, and unfortunately, we're out of time. I have at least 3 more hours worth of questions, and I'm jotting them down as we go forward here. So I hope to have you back on and see the future show. I've learned an awful lot. I greatly appreciate your spending time with us today.
No problem. I enjoyed it.
Awesome, and you don't have any you don't have anything to sell, right? So you're like, all right, there's no end of show promo going on here, and I was like,
Nope.
wait, what?
Nope.
How do
Nope.
people find you? They can find you through me if they're interested in reaching out
Yep.
to you.
Yep. I'm on LinkedIn, various places like that. I have an email address which I can share with you. So if anyone has any questions, I'm more than willing to talk to them about currency markets. Again, my corporate background, I have some strong views about how, middle America hedging is where I think is worth that, Jim, because in the 80s, only the major Fortune 100 had the armies of people to analyze Deutschmark or the Japanese yen or the pound or the French franc. Now, the importer sitting in Dubuque, Iowa, can communicate with the exporter in Krakow, Poland, just as easy as IBM can. And so they're all able to sell their products across borders, but what they don't have is the FX expertise. They know about their product and they know who wants to buy it and they make it the best in the world. But once they've done the sale, then they go, oh, now I have Polish zloty. What do I do with those? And so
Yeah,
that's where they need help. It's that middle corporate area of the export market and the economy that's exporting and importing to beat the band because they make stuff really well, but they don't really have in their corporate treasury the army of PhDs in international economics. And so that's where I think
got it.
people like me help.
All right, that's the next show. That was the description of the next show. I can't wait. There's so much there in that idea. So do look forward to having you there. And
Okay.
Stephen, if you could hang tight, don't log out real quick. Hang tight.
Okay.
Again, thanks for coming. I'd like to thank the audience too for being here with us today and see the futures. Another very interesting show with a very interesting, knowledgeable guest. Having said all that, folks, remember later on today, Tom Schneider is going to be live at Bar's Closing. In the meantime, please be safe out there. Be good to each other. Thank you.